Bryan Gaiser is an investment advisor representative of Advisory Alpha LLC, an SEC-registered investment advisor. All opinions expressed by Bryan Gaiser are solely his own opinions and do not reflect the opinions of Advisory Alpha. This recording is for informational purposes only and should not be relied upon for investment decisions. Investment advisory and financial planning services offered through Advisory Alpha LLC, a registered investment advisor. Insurance, coaching, and educational services offered through Gaiser Financial Group. Gaiser Financial Group is a separate and unaffiliated entity of Advisory Alpha LLC. While tax and legal services may be discussed in the general course of financial and investment planning, Advisory Alpha does not provide tax or legal services. Please consult with your tax or legal professional prior to making decisions related to these issues. This material is not endorsed or approved by the Social Security Office or any other government agency. An annuity is a long-term financial product designed largely for asset accumulation and retirement needs. All guarantees are backed by the claims-paying ability of the issuing insurance company. All opinions expressed by externally cited sources are solely their own opinions and do not reflect the opinions of Advisory Alpha. This is for informational purposes only and should not be relied upon for investment decisions. The case studies presented reflects the specific circumstances of one client and should not be considered a guarantee that another client or potential client may experience the same or certain level of results. This is for informational purposes only and should not be construed as investment recommendations or solicitation. Names have been changed to protect the anonymity of clients and are not testimonials in nature. Learn, grow, and take charge of your retirement. This is the Wealth Through Wisdom podcast with financial advisor Bryan Gaiser, founder of Gaiser Financial Group.
Something that you really work to impress upon people is the power of surplus income in our retirement, Bryan, and helping folks figure out how to create that is a very important part of your job. And
Yes.
when it comes to options in that space, dividend-paying stocks obviously are something that are a very interesting option for a lot of us. Even still, companies can cut or suspend dividends at any time. But if you look at a company like Kimberly-Clark, it's actually paid a dividend for 92 years. It dates back to 1934. And maybe you've heard the term dividend aristocrats. And if so, this is what people are talking about, this kind of consistency, Bryan. But the question for you is, are there still companies with this kind of track record out there for investors? How do you help people discover what their options are?
You know, aristocrat is kind of like a club of 25 year and 50 years plus. Mm-hmm. Paying a dividend consistently. Some consistently have risen their dividend every single year. There's a lot out there, and that's kind of like their attraction to you buying their stock, right?
Right.
Growth is important to them, but the dividend's just as important. And I think the way we use them here at Gaiser Financial Group through our team at Advisory Alpha, which is my back office for my managed side, I'm a big fan of, hey, things are going to get bumpy. When it comes to the managed side of business, not the safe side of business, if you will, or the less risky, I should say. Mm-hmm. When we talk about dividend paying stock, it's a great way to continue to reinvest in yourself to help you stay in the game, mm-hmm. right? Because a lot of people run when the market gets a little shaky, and that's not the smartest thing in the world because you just can't time the market. Maybe somebody out there can time the market, but it's such a rare breed. And if they do, I wonder what the insider trading looks like. Right. I'd love to see their phone bill.
Right.
But it really timing or time in the market. I'm a big fan of time in the market, mm-hmm. but also don't have too much in the market. I also have a balance of dividend stocks and growth stocks. And, your value stocks, you'll see a lot of really strong like Kimberly-Clark and whatnot. And value stock has less risk. I mean, it doesn't have risk. It has risk. But when you have that dividend, if you can average 4 or 5% in dividend and say you have $1 million, and let's just round it, it's 40 or 50,000 a year getting reinvested and you didn't need those dividends, that you're allowing those dividends to add more cash to buy more shares for when the market does go up. Dividends are wonderful when the market's low. You're buying more shares. You're still buying more shares when the market's up, but you get you're getting basement bargain prices, if you will, on stock.
Yeah.
So you got to kind of look at it as when you retire, you got to retire to your second job, and that's you're now manager of your retirement store. You've got to take that money in that nest egg and make sure it lasts the rest of your life. And part of that is reinvesting during your retirement, investing during your retirement. And I'm a big fan of that, and literally have it laid out going, well, I can see where I'm investing back in myself, even in retirement.
Yeah.
And dividends are a great way to do that. Folks, I'm telling you, dividends are an excellent, excellent method to continue to invest in yourself while in retirement. Real quick, I want to give you our number. So write this down, 336 336-5861. Once again, that's 336-586-5861. We sat down with you. And when we build your plan, it's specifically to you. It's specifically, we look at the options of dividends inside your portfolio. We look at the options of annuities. We look at the options of bonds, treasuries. We look at CDs if they're a fit, actively traded CDs, things of that nature. But the bottom line is there is no one answer when it comes to a retirement plan. It's looking at your big situation, looking at what does your income streams look like? Do we need to create another one? All of those kind of variables come into play that keep you in surplus income. Well, if you have surplus income, you can reinvest in yourself. Part of surplus income is including the dividends that are being paid to you as well, and reinvest those dividends. Keep buying those shares. It's all about the shares. But folks, once again, that number is 336-586-5861. We're right here on Dolly Madison Road in Greensboro, right off of Friendly Avenue near Guilford College. Give us a call. But when it comes to dividend stocks, some of our folks take the dividends, but more allow them to be reinvested, Heather.
Okay.
Which, like I say, expands the shares that they're buying.
Which is an interesting point, because I think when a lot of us hear dividend stocks, we think, I even started off this conversation by saying, you're constantly talking about surplus income. So a lot of us think dividend stocks, we think income, but you're saying, yes, that's an option. But for a lot of the plans that you build, you see it as a reinvestment opportunity.
I look at, when you talk about surplus income and I talk about it, I try to look at it from the first known surplus income. They can't cut off surplus income. I do.
Okay.
I create you your own personal pension. If you have a pension, that's going to keep coming. Social Securities are pensions. The pension at work. Well, all of these things we're talking about is known numbers that are coming every single month.
Okay.
So if my bills are $7,000 or $8,000 a month, and I have 10, 11, 12,000 coming in, I have surplus income.
And the dividend stock is not necessarily known because it's in the market. Got it. Okay, I'm with you now.
It's in the market. It might not be known. It might be canceled.
Right.
At some point, and then that's when I rebalance.
Okay.
And find another stock to replace that stock, or ETF funds that are built off of dividends.
Right.
So we just try to look at it from that standpoint so that you continue to invest in yourself. It's considered. But when it comes to surplus income and retirement, if you have an extra $5,000 a month coming in, you can feed that emergency bucket, because, things will happen. You may need surgery one day and your insurance doesn't cover it all. It could be your hot water heater, your windows need to be replaced.
Yeah.
These big expenses, if you're feeding that, rainy day bucket, that can cover these kind of, oh my goodness, big boo-boo, foundation crack, whatever it may be. Mm-hmm. So it really is, the dividends is really about reinvesting back in you, expanding your stock base. And if you keep doing that throughout retirement, high probability you'll never look back. And yes, does it take time? No doubt about it. But having an attitude of, hey, I retired, but now I got to manage my retirement store and enjoy my retirement, because you better manage those funds right or you'll run out of money. If you're spending more than money that's coming in, clearly you'll run out of money. Kind of goes hand in hand. Spend more than you have coming in. But you'd be surprised. People say, I never realized I spent so much. I said, well, you never did a budget. Maybe you do a budget and say, will I be happy under these dollars, being spent every month? Will I still do the things I love to do, the travel and all that? And do I have excess money? And if not, you probably need to restructure your retirement. Folks, that number, I want you to write this down. 336-586-5861. Give us a call. Love to sit down with you. Reminds me of a client. One of my clients just recently, unfortunately, passed away. And then his wife shortly after passed away. And over a 12-year period, we were able to really do well with his assets, right?
Okay.
And a big part of that, it was the reinvesting of dividends. Yeah. And the money he had for growth more than doubled in that 12 years, right? It was working on its fourth double. But the point I'm trying to make here is the reason we were able to do that, he put money inside the growth world. I don't need that money. If things slip, I've got more than enough income coming in. I've got a strong surplus every month because of what you structure, Bryan. That takes my pressure off me making a dumb decision like, oh, pull me out. The market's down 10%. Pull me out. The market's down. That's it. We structured it. We structured him with an annuity, structured him with income streams. We structured the dividends where there were reinvesting. And when things dipped a little bit, we looked for opportunity. What would be a good purchase right now? So it's those kind of things that make your assets grow. That's the team I have at Advisory Alpha Group, the group I work with under a managed standpoint, that enables me to do such a thing. So folks, in retirement, you want to structure yourself in a way where you keep on investing. Our number here at Gaiser Financial Group, 336-586-5861. Once again, that's 336-586-5861. 336-586-5861.
So what happened then with this couple? You were saying you were working so diligently to help them use their dividends to continue to grow their wealth, and he passed and she passed soon thereafter. What happened with everything that you were helping them build and grow?
Well, they had a son. The son inherited a good part of it. Now they're older, so they had grandchildren too. So the grandchildren are getting a good little chunk.
Good.
She had a real good friend that helped her out years ago, and she took good care of her because she knew she had fallen on hard times.
Yeah.
So she had her in her will.
Got it.
To help her out.
Got it.
And that really helped out. What it did for one of their grandchildren, the money they received, paid off their entire college loan, which was over $70,000.
Amazing.
Then I know if they're here, they're looking down going, it worked out just the way we thought. Because we took those funds and did really well with them because we were able to, hey, look, when things are bumpy, you got to have bumpy in the market. If you don't have bumpy in the market, your money's never going to grow. You got to have bumpy. So don't let it scare you. You got to look at the market as a win-win deal. And what I mean by win-win deal is when it's a little bit ugly, that's a win because there's opportunity out there.
Embrace the bump.
Embrace the bump, baby. And it really does pull down to that.
Yeah.
And a lot of people are afraid of it.
I know.
And they allow fear to be connected to it.
Yeah.
To me, I connect opportunity to bumpy times. I'm going to tell you that phone number one more time, 336-586-5861 right here on Dolly Madison Road, 445. Dolly Madison Road, Gaiser Financial Group. That number again, 336-586-5861.
Thanks for listening to the Wealth Through Wisdom podcast. To learn more, visit geiserfinancial.com. Bryan Gaiser is an investment advisor representative of Advisory Alpha LLC, an SEC-registered investment advisor. All opinions expressed by Bryan Gaiser are solely his own opinions and do not reflect the opinions of Advisory Alpha. This recording is for informational purposes only and should not be relied upon for investment decisions. Investment advisory and financial planning services offered through Advisory Alpha LLC, a registered investment advisor. Insurance, coaching, and educational services offered through Gaiser Financial Group. Gaiser Financial Group is a separate and unaffiliated entity of Advisory Alpha LLC. While tax and legal services may be discussed in the general course of financial and investment planning, Advisory Alpha does not provide tax or legal services. Please consult with your tax or legal professional prior to making decisions related to these issues. This material is not endorsed or approved by the Social Security Office or any other government agency. An annuity is a long-term financial product designed largely for asset accumulation and retirement needs. All guarantees are backed by the claims-paying ability of the issuing insurance company. All opinions expressed by externally cited sources are solely their own opinions and do not reflect the opinions of Advisory Alpha. This is for informational purposes only and should not be relied upon for investment decisions. The case studies presented reflects the specific circumstances of one client and should not be considered a guarantee that another client or potential client may experience the same or certain level of results. This is for informational purposes only and should not be construed as investment recommendations or solicitation. Names have been changed to protect the anonymity of clients and are not testimonials in nature.